This is a training session regarding the automated year-end closing procedure. At the end of each fiscal year, accepted general accounting principles dictate that the income statement should be zeroed out. The profit from the previous year should be moved into the balance sheet under the retained earnings account. Now, this could be accomplished by hand by going into the General Ledger transaction entry system and entering transactions that will reverse out the year-end balances of each one of the General Ledger income statement accounts. However, the accounting system has automated this process, and the program to do so can be accessed by selecting Year-End Closing from the General Ledger main menu. This window includes a short description of what is to take place. The program will create a group of transactions to clear your profit and loss statement for the new fiscal year. This transaction group is placed in a batch where you can prooflist it and post it using the General Ledger transaction processing program described in a different training session. Year-end closing transactions are posted to a special year-end fiscal period, which falls between the last period of the year to be closed and the first period of the subsequent year. In most cases, the fiscal year coincides with the calendar year and ends in December. When this is the case, an additional fiscal period called year-end must be added between December and January of the subsequent year. In this field, we enter the number of the year-end fiscal period. Balances to be reversed will be retrieved from the period prior to this year-end period, and the reversing transactions will be applied to this selected year-end fiscal period. Here we can enter the number of the transaction batch into which the group of year-end closing transactions will be saved. Now we'll click the Proceed button. The system retrieves the year-end balances for each one of the GL accounts from the profit and loss portion of the financial statement and creates a General Ledger transaction to reverse that balance. We can now select Transactions from the General Ledger menu. Our new group of year-end closing transactions will be displayed in this list box with total credits and debits that match. Let's click the Change button and view the group of transactions. We see all the transactions that offset the year-end balances of our profit and loss accounts, as well as a final transaction that applies the difference, or the profit or loss from the year, to our retained earnings account. We can now use the batch processing buttons here to prooflist and post our year-end closing batch. Once the batch of transactions has been posted, a trial balance report printed for the first period of the new year, usually January, will show beginning balances of 0 in all the accounts that show up on the profit and loss statement. I should mention that tracking job costs in the income statement presents a challenge when creating year-end closing transactions. It has to do with maintaining a balance between the General Ledger and the job cost subsidiary ledger. This I'll explain. To illustrate, let's open the Accounting Overview window. On the Job Income and Costs tab, we can see the current balance of each of our job cost control accounts. Note how in each case this balance is equal to the total amount found in the job costing ledger. In other words, the total labor cost for all our open jobs is shown here, and the current account balance for the Labor Jobs in Progress GL account, displayed here, has a matching figure. At the end of the year, we would normally set all the account balances in this column to 0, since they're part of the income statement. If we did this, however, we would create a mismatch between the two columns. Our job cost subsidiary ledger would be out of balance with our general ledger. We need a way to keep this balance matching the subsidiary. Now let's close this window and go to our job cost settings by selecting Accounting Options and Job Costing from the Setup menu. Here on the second tab, we can see a column where we can enter general ledger accounts to store prior year's job costs. If there are account numbers in this column, the system will slightly alter the creation of closing transactions for the open jobs accounts shown in the first column.
The system will create transactions that will maintain the balance between the two ledgers. Here's an illustration of how this is done.
Let's say that the balance of the labor open jobs account is currently $400,000. When the year-end closing transactions are created, instead of creating a credit of $400,000 to this account to set it to zero, the system will instead create a credit to set the balance of the prior year's labor account to negative $400,000.
The balance of the labor costs GL account remains the same. Since both these accounts belong to the same master line item on the income statement, the net balance of the two accounts, or year-to-date labor cost, will print as zero on the income statement to start the new year. This concludes this training session on the General Ledger Automated Year-End Closing Program.